Hope you're doing well today. Just going to walk through a quick market update for you, let you know what we're looking at, what we're trading, what the potential opportunities are for the day, and then let you get out of here. So we're going to keep it about 5 minutes or less, and let's get right to it. So the first thing we're going to do is we're going to pop over here to the screen and check out the news that's coming up for the day. Earlier this morning, we had some Euro bank rate information followed by a press conference and U.S. unemployment claims, which it's interesting. Came in a little better than forecasted. Don't know how that might offset things from the terrible news that we had on Friday that was way off the point. But at any rate, it is what it is. Really, the goal of looking at the news, though, isn't to prognosticate what's coming up for the day. It's just to know if there are any high impact reports or speeches that are happening that might impact the market and might cause us to, make a decision to stay out of the market. So with that said, there's really, excuse me, there's really nothing going on, excuse me, for the day today. Excuse me, I don't know what's going on with my voice. So there's really nothing going on for the day today that would keep us out of the market. So with that said, we can pop over here and just have a look at what's going on. Of course, as always, we're looking at the S&P, crude, and gold, all of which are, shouldn't say all of which, but most of which are in mixed states of bias. So, looking at the S&P, we've got a 4-hour bias that's still long, 30-minute bias is short. Right now we're in a holding pattern using that BTX method. There's nothing that we would want to do right now at all. So there's no action to take there at all. Yesterday, we did talk about some key levels. Remember, I'd been mentioning 45.15 quite a bit, and I said yesterday that if we broke it, it'd be a good spot to look for selling opportunities. Keep it tight. I said, 5-point stop. And then if it moves 5 points, move your stop loss to break even or a little bit better. And then if it goes 10 points, just take your profit at double that, double your initial risk, right? I had 2 opportunities to do that yesterday, multiple. So you had it here first, and then you had it here again later in the day. Broke out of 45.15 2 times. So, good opportunities there to take some counter trend trades outside of the BTX method, just using very simple channels and support levels. Today, we don't really have anything setting up like that, so we're going to stay on the sidelines today for the S&P. Nothing to do here at all. For crude, we are in a long bias, 4 hours long, 30 minutes long as well. So we're looking for long bias, long trade opportunities there. That'll look like what we saw yesterday, which is lower highs, lower lows, and then playing a breakout of that previously closed lower high. We had an opportunity here yesterday as it broke out of that previously closed lower high by like literally a tick and then came back and took us out. On this trade though, what we always talk about is if you're using a $10,000 account, you might want to limit your risk to about $500. So for my model account, this did not end up being a trade for us because the risk here exceeded the $500 limit. So that initial risk of your entry point of 69.44 and your initial stop loss of 68.91 would have put us above our risk threshold. So as I've said before, you have 2 choices when something's above your risk threshold. Either A, you simply don't trade it, or B, you chunk down and trade maybe multiple micros. My choice is always just to say, don't trade it, right? Just stay away from it. So this, while it was a trading opportunity, was not a trade that's going to be shown in the model portfolio because it exceeded the initial risk of what our risk parameters are. Now, with today, we're making some lower highs, lower lows here. So as the regular session gets underway here in about an hour, a little less than an hour, if we start breaking back above these previously closed lower highs, that'll give us an opportunity to see if we can't make a run again at crude. So crude is on the board right now, but we need to see lower highs, lower lows, and then a break back in the direction of that current market trend, which is long. So the bias there is long. Gold, again, big X. Actually, it actually flipped over on us. So gold is in a short bias now. I don't really believe that. So I know you're not supposed to put our emotions on or put our biases on anything, but gold is in a short bias. So 30-minute is short, 4 hour is short as well. So we'd be looking for short opportunities, which means we'd like to see this float back up, making higher lows and higher highs, and then play a break back in the direction of that current bias, which is short. I would say this though, you know, if we break back above 1800 on gold, I would say either do one of two things. Either A, just don't trade it, or B, if it breaks above 1800, you might look at some long opportunities there with that same 5-point stop loss, 5-point or 10-point take profit guideline that we used for the S&P yesterday. But for gold, the bias is short, so that would be a counter trend trade if you ended up doing that. Flip side would be if it breaks above 1800, maybe just stay on the sidelines. But the bias is short, so we'd like to see higher lows and higher highs, and then a break back in the direction of that current bias as it breaks down below that previously closed higher low. Then we would look to go short on that. But anyway, you got my commentary there regarding that 1800 level right here. All right. So anyway, that's it for me. I want to leave it here, let you guys get on with your day, and we'll come back tomorrow, see what the market brings us and what opportunities exist.